I want to explain to you how to get a small business loan when self-employed, okay? And if you're self-employed, you have many hopes to actually jump through when it comes to funding. Sometimes the bank or credit union will ask you if you're a company, like if you are incorporated, if you're an LLC, if you're self-employed. It really depends, okay? So let me give you some generalities here. So if you think about self-employed and you want to have funding, you need to understand that bank loans are great for low interest rates, but because of their strict underwriting requirements, self-employed business owners may have more luck with online lenders or alternative types of financing. So you might be luckier to go to a lender such as SoFi, or a lender such as like a lending marketplace such as Lendio, than to go to a Citibank or a Wells Fargo, for instance, unless you have a strong relationship with the bank, or you actually are generating enough cash flow to actually sustain your activity. Okay, so lenders look for steady revenue when offering a self-employed business loan, often of at least $100,000 annually. And credit cards and personal loans may be an option if you can't get a business loan. So this is something to really think about, especially from a flexibility point of view. So if you are working for yourself, money can be tight, right? Especially when you are trying to grow your business. And a business loan for self-employed people can give you the capital needed to cover short and long-term business goals, and you can use it for working capital expenses or any other business related need, such as investing in marketing, equipment, or other products and services that will help you expand. So you really have you got to have the right vision. Let me just put it that way. You got to have the right vision. You don't need to have a incorporated. You don't have you don't need to have an LLC. You don't need to have an LLP. Okay, to get financing. Okay, and the thing is that you just need to reach out to the right lender with the right condition, but also the right paperwork to actually secure the funding for your self your let's say your sole proprietorship, if you will. Let me share with you the tactics here. If you are trying to get a small business loan when self-employed, it's important to understand that everything starts with the revenue. Everything starts with money. Everything starts with cash inflow and cash outflow. See, the whole thing is you're asking the lender to give you money based on something, right? Based on your ability to repay the loan. So for them to evaluate how likely you are to repay the loan, they have to look at your revenue. Revenue means your cash inflow. So the cash inflow is important. So your level of revenue will play a role in getting approved and for how much, right? So if you're asking for a $100,000 loan, but your business is generating, let's say, 10 grand a month or 20 grand a month, your chances of qualifying for that loan will be much higher than if you are generating, let's say, $1,000 a month or 10 grand a year, for instance, right? So everything has to be has to depend on your cash inflow and cash outflow. So you got to be really clear about you got to really demonstrate steady revenue. See, the whole thing is, it's not just about the amount of revenue that you have. It's also about the stability of the revenue. So your revenue generating machine, it has to be stable for the lender to actually trust that you will be able to repay them. See, the whole thing is when you get a loan from a vendor, when you get a loan from a lender, they're mostly concerned about your ability to repay them, right? So that's why most lenders are looking for at least $100,000 in annual revenue. But some lenders some lenders will take less. For instance, you have lenders who will take you in if you are making $50,000 a year. Okay. Now, banks and credit unions tend to want to see, let's say, higher revenue. Let's say 150,000 or even $250,000 a year, while online lenders will generally have lower requirements. Okay, so that's really important. So the more revenue you can prove, the more likely the lender is to feel that you can pay back what you are borrowing. Right. The keys here then lie in not just generating the revenue, but also in tracking it. So make sure you have a reliable way that you are monitoring paid invoices, credit card sales, or any other revenue channels that you have. And as your business matures, your tax statements become a huge help here. Your tax returns include your gross and net revenue, and turning them over to lenders can validate your candidacy for a self-employed business loan. That's true even if you file your business earnings under your personal taxes, like you operate as a sole proprietorship, like you are instead of filing taxes as a 1065 or 1120, you're filing a 1040. So that's totally great too. That's really good. If you want to get a small business loan when self-employed, you also need to go with a self-employed friendly lender, right? A quick internet search should point you in the direction of financial institutions willing to offer a self-employed business loan. So you have, for instance, you have PNC, you have Discover, you have a Fiber Federal Credit Union. Those are credit unions who are willing to work with self-employed individuals, and they all have dedicated landing pages geared toward helping people who work for themselves and find financing. Okay, so if you are struggling to get a self-employed business loan, look for a lenders that's backed by the SBA, because SBA loans are guaranteed by the federal government. The lender gets help recouping some of their losses if you don't repay what you borrow. So this makes the lender more open to underwriting a loan they may deem somewhat risky, like a business loan for self-employed folks. Okay. And you also want to offer collateral. So one thing I want you to really think about here is that collateral can really help you big time in terms of stability. Let me explain. The whole thing is you're trying to show that you are a reliable customer, right? So since backing the loan with assets guarantees that you can repay, lenders actually look more favorably on a loan application secured by collateral. And some things actually you can put up for collateral for your business loan include any company real estate, like your office location, if you own it, right? Business equipment, company vehicles, personal assets like your house or investments, and inventory. And in some cases, and that's an important element, you can also pledge future earnings as collateral for the loan. And this is actually this calls for invoice financing or invoice factoring. Okay, so with invoice factoring, for example, you can get an advance for a percentage of unpaid invoices which the lender actually will collect. Now, be advised though that invoice factoring usually comes with unfavorable terms compared to other small business loans that you actually have. Okay. You also want to gather the required documents. So as a freelancer or self-employed business owner, you may not have all the same documents as an employer-based business. So to show that you do get revenue from self-employment, you'll usually need personal bank statements, business bank statements. Okay, if separate, of course, tax returns, either your business tax returns or your personal ones with Schedule C or SE included, depending on how you file. 1099 forms, business financial statements such as balance sheet or your report from accounting software such as QuickBooks, but also your LLC formation or incorporation documents, okay, if applicable, of course. So that's something to really think about this year, okay? So let me talk to you now about the right loans. So if you're thinking about getting a small business loan when self-employed, you need to choose the right kind of loan for your needs, because the freelancers and self-employed business owners can get most of the same business loans as other businesses. You can choose the type of loan that best matches your purpose for funding, especially if you're if you're shopping around and you're looking for what's available to you. Okay, so bank loans are great for low rates. Bank tends to offer the lowest interest rates compared to other lenders, helping you save money in borrowing costs in the long run. But banks may consider your self-employed business more risky than other businesses, especially if you haven't built up total revenue or steady or diverse streams of income. If you don't have a credit score of say 670 or higher, and at least 1 or 2 years time in business, you may need to look at other types of lenders. Also, you can think about online business loans. Online business loans are great for accessibility, especially in this economy right now. Okay, something to really think about. And online business lenders often use alternative data when they are reviewing a business's credit. For example, these lenders may look at personal bank statements and bill payments that are now reflected in your personal or business credit score. So using alternative data helps online lenders approve actually startups or freelancers that didn't meet the guidelines for a traditional bank business loan. So this is really good from a flexibility point of view. You can also try one thing. You can try actually a business line of credit, and business line of credits are really good for flexible spending. Okay, so business lines of credit blend the features of a credit card and a business loan, setting a loan limit that you can borrow from at any time. And most business lines of credit from online lenders offer short repayment terms, usually between 6 and 24 months. But the short terms and ability to reuse the credit make it helpful to cover short-term expenses as they arise. So that's really good. You also have SBA loans. So SBA loans are really good. I'm still going through the right loans for you, okay? And SBA loans are great for repayment terms because they are partially backed by the United States government through the SBA. So this is really good because it gives you a flexibility there, okay? And SBA loans or business loans are partially guaranteed by the Small Business Administration. So because SBA loans offer repayment terms of up to 25 years, self-employed borrowers can stretch out payments over a long time, and this lowers the monthly amount, freeing up capital to use in other areas of the business. And SBA loans also cap interest rates to a ceiling that many business loans actually. Okay, so you also have microloans. So microloans are best for underserved communities. Okay, and so microloans are usually below $50,000. By the way, $50,000, and so those can be really interesting also. Or you can try as actually business credit cards. I mean, business credit cards can also be great. I mean, those are great. I mean, they work well if you're looking to cover expenses that can be paid off quickly. As long as you pay off the card in full every single month, you won't pay any interest on the purchases you actually made. Okay, so this is kind of good to think about. And one thing I want to say is that basically the best how do I say it, the best credit cards for, let's say, self-employed individuals can also let you earn perks and rewards. Many cards give you a 1% to 5% cashback from purchases, while others let you earn points you can redeem for travel, cash, and more. So that's really good. So as a freelancer, independent contractor, or sole proprietor, every dollar counts, and you won't get the chance at zero interest with standard business loans. Business credit cards also welcome unincorporated businesses, not requiring you to be an LLC or a corporation before applying. You also can try personal loans. So when I say the right loans, you got to really understand that if you don't get a business loan, you can try a personal loan. So personal loans are great for new businesses, especially if you are trying to really to establish business credit, but you don't have the business credit yet. A personal loan can help you out, okay? And because a personal loan will actually help you tap into your personal credit worthiness to establish your business credit worthiness. So while it's possible to get a self-employed business loan without forming a legal business, personal loans won't require you to show business formation documents. However, some personal loans will include restrictions on how the funds are used and may restrict the funds from being used for business purposes. You will need to read your loan agreements carefully to make sure you are using the loan in accordance with the contract. So something to really think about. Additionally, if you get an unsecured personal loan, you won't have to back the loan with personal assets. Many business loans require you to sign a personal guarantee, which allows the lender actually to go after your personal assets if you can't repay the loan. So this is really this is something to really think about. And you also have finally an MCA. So an MCA is great for emergencies. So if you are a self-employed individual and you need to have you need to get funding real fast, an MCA can help you. Let me explain here. An MCA stands for a merchant cash advance, and this type of funding has high approval rates, making it very attractive. If you don't qualify for other business loans, MCA lenders approve you based on your past sales revenue, typically for businesses taking credit or debit card sales. So because MCA lenders rely on your sales history, they tend to approve even businesses with bad credit, such as a personal credit score of 550. So many MCAs also approve and deposit funds quickly, in as little as 24 to 48 hours in some cases. So you usually pay an MCA daily or weekly, which could strain your business budget until the debt is repaid, right? And MCAs also come with high fees that convert into interest rates of 50 to 100% or more. So this is really good. So because you are bound to get approved but are charged the higher fees, merchant cash advances are best used as a last resort when you need funds to cover emergency expenses. So something to really think about. So what are the extras here? If you think about getting a small business loan when self-employed, you need to understand that the most common small business loans depend on the industry, but when non-employer businesses need funding, owners of new businesses less than 2 years old tend to apply for credit cards, really, okay? So about 35%, they tend to apply for loans, 16%, and lines of credit, 12%, okay? So according to recent research, so you can see that basically there is a difference in terms of the I would say the position of the business, because more established non-employer businesses most often seek out credit cards, loans, and lines of credit. Okay, so since there are so many different ways to get a business loan for self-employed people, just finding which type of financing is right for you is already a lot of work, right? So, but the cool thing is that you can actually try lending marketplaces such as Lendio, for instance, to really see what's available out there for you. Or you can try other platforms such as National Business Capital. Those can be really good also to in terms of helping you. Or you can try also Clarify. I mean, those are really important. Clarify Capital, okay. And one thing I want to say also is that you always want to make sure that you are able to repay the loan, because you want to borrow an amount that you can repay, okay. And so when you're self-employed, your main challenge is growing revenue to serve more customers, often with less capital than other businesses. So getting a business loan can give you the boost that you need, as long as you actually meet the lender's requirements. So as a coda into this conversation, I explained to you how to get a small business loan when self-employed. I give you the generalities, the tactics, the right loans, the extras in the coda. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.